Imagine this: trillions of dollars in real estate, bonds, and treasuries, assets that have been locked in traditional finance for decades, suddenly becoming liquid, fractional, and tradable 24/7 on the blockchain. This isn't some far-off dream. It's happening right now in 2026, and it's called real-world asset tokenization. It's the quiet revolution that's bridging traditional finance and crypto, and it's poised to become the next trillion-dollar narrative in the space. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Let's dive in. Real-world assets, or RWAs, are tangible things like real estate, commodities, bonds, or even fine art. Tokenization is the process of converting these into digital tokens on a blockchain. Think of it as taking a physical asset and representing its ownership and value digitally, making it easier to buy, sell, and trade. This isn't new. It's been brewing since around 2021, but in 2026, it's exploding. According to data from RWA.xyz, the distributed value of tokenized RWAs has reached $25.02 billion as of February 18, 2026, up 12.54% from just 30 days ago. The represented asset value, a staggering $370.59 billion. It's real money flowing into crypto infrastructure. Why is this reshaping crypto? For starters, it solves some of the biggest pain points in traditional finance. Assets like real estate or private credit have always been illiquid, hard to sell quickly without losing value. Tokenization changes that by enabling fractional ownership. You don't need millions to invest in a prime New York skyscraper. You can own a slice for as little as $100. Plus, blockchain brings 24/7 trading, instant settlements, and global accessibility. No more waiting for bank hours or dealing with endless paperwork. As CoinDesk reports, the tokenized asset market nearly quadrupled to almost $20 billion by the end of 2025, and experts predict it could hit over $100 billion by the end of 2026. Some forecasts even point to $400 billion in tokenized securities alone. This isn't just theory. Major institutions are all in. BlackRock's BUIDL fund, a tokenized treasury product, has over $1.7 billion in assets. Franklin Templeton, managing $1.5 trillion, calls tokenization the biggest opportunity in finance, bigger than Bitcoin itself. The New York Stock Exchange is launching a blockchain-based platform for 24/7 trading of stocks and ETFs with instant settlements. Even the London Stock Exchange is rolling out blockchain settlements using tokenized commercial bank money. And State Street, one of the oldest custodians, is diving into tokenized deposits and stablecoins. On the regulatory front, things are aligning perfectly. The Genius Act in the US is paving the way for institutional on-chain markets. China just unveiled a framework for RWA tokenization and crypto risk management, balancing onshore restrictions with offshore compliance. The Bank for International Settlements project Agora involves the Fed, ECB, and over 40 banks testing digital payments. This clarity is drawing in trillions from traditional finance. Now let's talk about why this is the next trillion-dollar narrative. McKinsey speculates tokenized RWAs could reach $2 to $4 trillion by 2030. Boston Consulting Group upset to $16 trillion. In 2026 alone, we're seeing projections of $260 billion linked to RWAs, with nearly $19 billion deployed in DeFi. Tokenized real estate could hit $1.4 trillion in market cap this year. It's not hype, it's utility. RWAs bring stability to crypto. Think tokenized treasuries as pristine collateral, reducing volatility and enabling sophisticated DeFi products like perpetual contracts on real assets. As Aspen Digital notes, tokenization could become a trillion-dollar market in 2026. Driven by demand for tokenized money market funds, gold and perps. Look at the growth, from virtually non-existent in 2020 to $20 billion in early 2026. RWAs outperformed every major crypto sector in 2025, with average returns of 185.8%. Projects like Ondo Finance have hit $2 billion in total value locked, with $450 million from tokenized stocks and ETFs. And on X, users are buzzing about platforms like Block Square and Plume Network accelerating real estate tokenization. This convergence of TradFi and DeFi is damping crypto's wild swings while importing real yield. It's making crypto mature from speculation to a global financial force. By 2030, in a base case, we could see $10 trillion tokenized. That's why RWAs are the narrative to watch. They're not just reshaping crypto, they're redefining finance. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.